Good evening, everyone, and thank you for joining me for the first of 4 Black History Special Lives. We're doing it for Black History Month every Tuesday at 7 p.m. Eastern Time. And so tonight, I'm super excited that I have two of the channel's favorite lenders. So these, the videos that they've done have the most views, the most comments, and it's Kevin Jefferson and Micole Sudduth. And they both have several videos on the channel, but I'm gonna highlight 2 of them. I think Micole has 2 videos that people love. One was all about the pre-approval process, and the other one was about building on your own land, So we've done those 2 videos together. Very successful, and people love her. And we have Kevin Jefferson, who y'all love as well. We did a pre-approval live, I think 2 Black History. This is my 4th year of doing these special Black History lives. So with Kevin's video, it's pre-approval, also very popular. And so if you haven't watched any of these videos, please watch them. They'll be in the description. He's done a Chenoa video as an option for people that were looking for down payment assistance, but were over the income requirement. So that's who they are. That's why I chose these 2 lenders specifically. We are going to answer your questions live. I'm moderating the chat tonight. I want them to introduce themselves so you can get to know them. I'm going to start with Micole. Micole, introduce yourself.
Hello, everyone. I am Micole Sudduth, as Shahida said. I am currently with Movement Mortgage. I've been in the mortgage business for about 26, 27 years. Started out as on the back end, working on loans after they close, and then moved to the front end and originating loans for people. I'm from the Atlanta, Georgia area, native. I'm married, no children. And that's pretty much it. I'm pretty much a boring person. So
all right, Micole, you're not that boring. All right, Kevin Jefferson, tell them about yourself.
I'm Kevin Jefferson, better known online as the People's Lender. I'm currently with Summit Funding, as well as me having a YouTube page that I need you guys to go check out. Kevin Jefferson / the People's Lender. That's it.
All right, so let's see. I'm gonna highlight the top 3 people that were here early. Elle was here. She says, "Wow, Micole, spelled your name wrong, but she still loves you." Is a guest tonight, so they're happy to see you back on the channel. Nisi Girl says, "Hello, everyone," and Sharna says, "Good evening." So thank you all for being with us. I have 3 of my own questions while more people are getting on, and then they're going to answer your questions. So go ahead and put them in the chat. We first come, first get an answer, right? So go ahead and put your questions in the chat. They have great information, a wealth of experience, as we heard. So my first question is, how are you finding? So interest rates are higher. Let's talk about then the pandemic times, right? Of 3%, 2%, even 4%. Now we're in the 6s, sometimes 7s. How are you finding that people are able to afford these mortgages at the higher interest rate and the higher prices? Are you finding that they are just qualifying on their own income? Are they using co-borrowers? Are they using down payment assistance, the equity from a home that they sold, rate buy downs, seller paid closing costs? How are they making this work when the average income is like $62,000 for most people? How are people making it work? And I'll start with Micole and then Kevin.
Okay. Well, what I'm seeing is I still do a lot of down payment assistance. So part of it for my buyers, the majority of my buyers, is still using those funds to, depending on the program, to buy down the rate, or if the program won't allow them to buy down the rate. Then the other part for me is just people adjusting their expectations and their limits, their sales price limits, or their payment requirements, I should say, right? Because I'm being honest, it is what it is. So either you're going to get on the train or you're going to get left behind. So you have to make a decision as to whether you're willing to readjust some of your priorities so you can become a homeowner, or if you are not willing to do that, to stay a renter. So a lot of down payment assistance on this side of it. And I do deal with new construction, and builders are offering great, huge incentives that they do allow you to buy down the rate, or they have bought it down for you through their own funding. So that's what I'm seeing a lot of.
Okay, good. What about you, Kevin?
I'm kind of with Micole. It is what it is. Like, so how are they doing it? More people, to me right now, are more concerned with the payment. So then you make that adjustment of, hey, you're approved for 500,000. Yes, that's what we're looking for. But this is the payment. Oh, it's that high? Like, that's the conversations we're having. So then I'm like, where are you looking to be? And they'll tell me the price and we adjust it down. Sometimes they're discouraged, just to be honest with you. But if you only want to pay a certain amount, you can't have the bigger house. Offsetting that, I've done some 2-1 buy downs and explain to them how it worked in terms of alleviating some of the costs for a couple of years. In Georgia, we got Georgia Dream, which is below market rate. So I've been trying to stick as many people in there as possible. Just being creative. So, and like you asked, like, I think it's been a combination of all: co-borrowers, 2-1 buy down payment assistance. I've had people leave and go to builders, to get a better rate. Some came back because they couldn't qualify, because all lenders that work with builders don't know how to do everything, like be creative with the financing. And buying them incentives. And I tell them, hey, if you're looking for new construction, I don't have $15,000-$20,000 to give you.
Right.
So I mean, you might as well
on that one.
Yeah.
All right. So great answer to those questions. Those of you that are just joining, we have 90 people on live right now. Those of you that are just joining, I'm going to ask the first 3 questions. That was one of my 3. Then I'm going to take your questions in the chat so they can answer them. We're going to try to get through as many as possible. So if you have a question, go ahead and put it in the chat now. Ashley did say, will you be leaving your contact information in the chat? I just put Micole's information in the chat. I'm going to let Kevin put his information in the chat. Also, in the description of this video, there will be all of their information as well. So when I put cell phone, all of that is Micole's information. It's kind of running together in the chat, but I want you to, that's what it is. Girl, she gave me all her cell phone number. So, but yeah, that's her information, but it will be in the description of the video as well. All right, my next question, and these are our special Black History Live lives every Tuesday in February. What is your best advice for first-time home buyers? And specifically is, what should they be doing before they even do their application? So before they do their application, what would you advise them to do first? That's Micole and then Kevin.
Oh, okay. Okay. So definitely have an idea of where you are credit-wise, debt to income wise. But to be honest, Shahida, other than the basics, make sure you are trying to pay everything on time. You're not overutilizing your credit. Where your documentation is: pay stubs, bank statements, W-2s, tax return. You can put your hand on them quickly. I really prefer that you do the application and let me see where you are. It's so many times that people assume they're one place and they're a totally different place. So I normally have a consultation with them anyway, just a preliminary conversation to feel some things out. Now, of course, if there is something said that is just an obvious, you're not ready because I know the business and you're not ready, then that's a separate situation. But normally I like to really see where they are so we can prepare them properly.
So your best advice is don't wait. Don't try to figure out stuff on your own. And
that's where they get a lot of bad.
I was worth $200,000.
Exactly.
Okay, so don't wait. Kevin, what is your best advice to first-time home buyers, what they should be doing before they come to you?
Lately I've been having conversations with people to tell them to go to annualcreditreport.com. And like Micole said, get familiar with what's on your credit. Like, get you a highlighter or two highlighters and just get used, know what's on your credit. Like, you need to know whether you're applying for a house in general, you just need to pull your credit and see what's on there that's inaccurate and accurate. The next thing that I have them do is I actually consult with them about opting out to getting something called trigger leads. So lately people have been getting highly upset with a lot of loan officers because Equifax, TransUnion, and Experian, when your credit's pulled for a mortgage, you think that me and Nicole is selling your information. It's not us, it's the credit agencies. And you're going to get bombarded with phone calls, emails, and text messages. And then people are upset because sometimes they'll pay for the credit report. Because what a lady did was she said that the person called and said, "Hey, I'm working with your lender." And she said, "Kevin." And she said, "Yeah, Kevin." She took her money and she paid for a credit report. And she said, "Hey, Kevin, I just paid for the credit report." I said, "There's no payment. Like, I sent you the link." So it's not going to alleviate all the calls, but it's going to help with you getting frustrated because you may get the wrong person to call you and steal your information. So, I would say pull your credit and opt out to getting your information sent out. And I'll get Shahida the link so you guys can do that in advance.
Right, because what he's saying is once you apply for a mortgage and they pull your credit with all the 3 credit bureaus, now the credit bureaus have your information and they may sell it to other people. You get other offers. So that is a good tip. That's a tip I hadn't heard before. So that's really good. All right. So my last question, because it is Black History Month, is I changed because Kevin mentioned it. It says Shahida Hill Realist. And normally I have Shahida Hill Realtor. And he's like, "You're not a realtor anymore." And I am still a realtor, but I wanted to put this on here because I'm also a realist, because it wasn't until like the 60s, probably really the 70s, because even though, realtors changed their rules, they weren't welcoming to Black real estate agents. So in 1947, the National Association of Real Estate Brokers was created for Black real estate professionals. So I am a member of both. I think if you're a realtor, you should join both. Definitely one or the other. But I changed it definitely for Black History Month for that information to be out there, because it's not as popular, of course, as what a realtor is. But I am a realist as well. So it's similar, but this is the African American, realtors, because we couldn't join, right? We couldn't become realtors. So my question is, the National Association of Real Estate Brokers, right, has declared a state of emergency for home ownership in the Black community. We're still at just about 45% of, only 45% of African Americans own a home. What do you feel like? Do you agree with them that we're in a state of emergency? And what can we do about it? If you agree, what can we do about it? And Micole first. Go ahead, Micole, Kevin.
Okay. I just
all right. For me,
now that we're clear, I'm first, Kevin.
Yeah, you're first right now.
Ladies first. I mean, state of emergency. I think we're in a state of emergency in general. I mean,
right. With a lot of credit, home ownership, everything.
Right. Okay. Yeah. So, as I think the world is, of course, and then if you want, unfortunately, our community, is definitely feeling it the most, I should say, as usual. And it is definitely kind of goes back to that a little bit on the first question, is resetting expectations and still getting in the game, right? So we are in a state of emergency, but we can still achieve home ownership. We may not be able to get the house with the 2-car garage or the 5 bedrooms, but does that mean that we can't still own a home that has 3 bedrooms and a carport? I mean, do you have a garage at your apartment complex? I mean, some things are just like, I understand there's true wants, but if this is your first home, then it doesn't have to be your forever home or your perfect home. But it will be yours. So I think a lot of it for us to get to stay in this is to definitely readjust some of our priorities, readjust some of our spending habits, and still put ourselves in a position, because they're not going to change anything for us. We've got to change it for ourselves. So if your income is what your income is, and this is what the payment is, you got to get in where you fit in.
Okay.
Are you gonna stay on the sideline?
Very good. Very good advice. She said, y'all don't have no garage in your apartment complex, but y'all want a garage in your house. All right. So Kevin, I want you to expand on that. And I'm going to be taking your questions, you guys.
All right. So I'm going to expand on it. Yes, we're in a state of emergency for Black home ownership, but some of it's self-imposed, right? After they put things into place in the 1960s, we own less now. We own less land now than we did 100 years ago, right? What we're doing is what I see, and Micole, you can tell me whether you see this or not. I see us putting more priority in the type of car we have than the type of home we get. And I'm going to tell you guys this because we family.
Yeah.
Stop getting cars in your name for other people. Your grown kids, your boyfriend, your baby daddy, your mama. Stop it. Because when I look at credit reports, that's what I see. I see a ton of car payments. No exaggeration. I've got a couple. And I wouldn't believe if I heard it, $3,000 in car payments.
What's their income?
And they don't qualify.
Just give us the income range. I know this may be kind of off.
Income range, one makes $75,000. The other one writes everything off on their taxes for business.
So they make $75,000.
The math is the mathing.
Right.
$75,000 and $3,000 in car payment. So if you're the good person, if you're the good credit person in your family, everybody can't ride your back.
Nope.
Because you're not going to be able to move forward financially yourself. That's just a hard no. And it's a difficult thing to say to your family, your mom, your children, but it's going to cripple you financially where you can't move forward. That's a very good example. Very, very good example. All right, L's on the chat talking about knowledge is power. I'll put you up in a second, L. I got to find it. But we did get a super chat. Let me go back and see if I can find it. Thank you for the super chat, L. She said knowledge is power, and she is very, very, very correct with that one. All right, so let's get into these questions. All right, so I'm going to give the first one because I just saw it. I'm like, y'all both answer this question. Micole's going to go first. How long does it typically take a lender to get back to you after you complete an online application? Can I say one thing before you say this, Micole? Mm-hmm. Don't just be randomly putting online applications on these sites because somebody sent you a link. I would want everyone, at least have a conversation with a real person first, then do the application. Okay. Don't just, I got a link, I'm gonna apply online. Because a lot of y'all do that. And you just, y'all think y'all ordering Uber Eats or something when you're doing your loan application. You want to know the person that you're giving your information to, so they know it's available. I'll let Micole get back. What's reasonable? And then what do you do? And then Kevin, you can do the same thing.
Yeah, that's the, that question is different for each loan officer. Mine is within 24 hours, 48 if I'm really, really busy, but I can't, that may not be the same for all loan officers, but so it's hard to answer that one, cookie cutter.
But what's a reasonable expectation?
It's 24 to 48 is reasonable.
Okay, 24, 48, y'all. 24, 48. What about you, Kevin?
24 to 48, not including weekends. So it's 24 to 48 business hours. If it's going to be a delay or it's a peak season like summertime, it may be 72. What I've started learning is to reach back out to the person and just give them an update, because sometimes your applications aren't easy or complete. So the more you put on the application the more we know, the faster we can get through. But 24 to 48 hours, 72 on the peak season. Business hours.
Yes.
Okay. Good question. And thank you for putting that in there. And like I said, Kevin's information and Micole's information is in the chat. I will repost it throughout this live. All right. This question is from NF Hart. Hey guys, my question is for Kevin. Are you established in Pennsylvania? My husband and I are looking for a new mortgage lender for a first-time home purchase. Do you work in Pennsylvania?
Yes, I do.
Okay. So Kevin's information is in the chat. You can reach him there. And this is going to vary, but give Big Boss, we'll start with you, Micole, an idea. For down payment assistance, what is the max you can make before you're cut off for help?
They got some questions tonight.
Yeah, I got a question before you cut off.
Yeah, cut off. It does vary. So, for instance, Georgia Dream, I think, is the one person. Now it's like 120, Kevin.
Yeah, it's like
400.
121, yeah.
Yeah. So they've definitely increased theirs substantially. We have some City of Atlanta programs. One is 86,000, one is 92. So, I'll say somewhere between that 86 to 121 for one person. It does change based on how many people are in the household.
All right, so 80,000 to 120,000 usually is going to be the maximum by program. It'll vary by state. So you have to make sure whatever program you're thinking about applying for. And it also, some things to think about is they go by household size. So usually the more people you have in your household, the more you can make. And then, but also if you have a lot of adults in your household, then they're going to sometimes count their income. So you have to be mindful of that. So if you have like your children still living with you and that sort of thing, and they're part of your household, and they're over 18, sometimes they ask for their income information as well. So it's best to just kind of look at the program, look at the rules. Like Micole and Kevin both said, just go ahead and get approved and see where you stand. And then, see what you need to do. Do you want to add anything to that, Kevin, before I get off of this one?
No, you added what I was going to say. Like, it's household income most of the time. So because your wife or your spouse or whoever is not on there doesn't mean that the down payment assistance isn't going to count their income.
Okay. Yeah. So it's going to be a hard one. I'm not sure I answer it though. What are the best ways to compare lenders? And I know once people fall in love with both of y'all, they stay with y'all the whole time. I know they do. But like if somebody was trying to compare, right? And, I've said last 5 years, get a loan estimate, and they're looking at the loan estimate and say this, because I think people just look at that, they look at the payment, right? They don't look at the points. They don't look at all of those things. So talk about what they should be really looking at when they're comparing, because things like taxes don't change, some things don't change. So what should they be looking at? Micole first.
That's always a hard one for me because I feel like if you're working with me, you don't need to compare. But I think most lenders are going to say that. But I do understand that it really depends on your situation. So you got to compare apples to apples is always my thing as well. So if you're if you're a buyer who's doing an FHA loan, 30-year fixed FHA loan, no assistance, then you need to make sure you get that same quote from the next lender. You know what I mean? So my rate, look at my interest rate, what it costs for that interest rate, because we always have to disclose that, whether it's in an origination fee or a discount point, we have to disclose that percentage on the loan estimate. And then all the other lender fees, such as the appraisal, on the credit report, we have administrative fees, different ones you can do dollar for dollar, but just look at the total closing costs, honestly, and the interest rate. And then that's going to be probably the easiest way to compare it, because there's so many variations with each lender on what they call, different fees and how they structure their estimates. So it can be difficult for a buyer to do a true apples to apples comparison.
Okay. Kevin?
The fees are going to be the biggest thing, but I will tell you that always going the lowest isn't always best. So you want to yes, everybody wants to deal You want the lowest payment you can get. But if your loan officer isn't helpful and knowledgeable, you're getting what you pay for. If you're not getting your questions answered, or they don't know about this and that program or how to do certain things, you might want to interview another loan officer to see. So like, if you're looking for rock bottom price, I'm pretty sure Micole and I probably aren't the cheapest. You can get an online lender, but you're going to talk to a different person each time. You can't call them on the weekends. They're not going to be able to be creative if you have a creative situation. So yeah, you can probably get it for less, but you're going to get what you pay for. You want to say that again.
Might not close on time or close at all.
Yep.
And
can I add something?
Say it again.
Can I add something?
Go ahead.
If you went to a previous lender and they quoted you a rate and then they don't close, you can't tell the other lender, well, they gave me a 5.875. No, they didn't, because you couldn't close. So, like if you couldn't, I could tell you anything if I can't close you.
Right.
So just give that person an opportunity to make you a homeowner. And then, I know it sounds cliche, but marry the house and date the rate.
Yeah. All right. Alan says, curious if you can share some examples of what final rates you're seeing after developers buy down today's rates. So I think Micole said you work with builders. What are you seeing, Micole, like have been the rates after they buy it down with some of your builders?
It varies. Right now, I'm seeing 4.99, 5.375. We're getting the builders. They're being very aggressive because they need to move this inventory. So they're putting a lot of money into buying these rates down into that level that they feel will get the buyers to come in and even take a look at their property, because payment is everything. So,
right.
But that's another hard question. I forgot his name.
It was Alan.
Yeah, Alan, because it's going to depend on the builder.
Good question.
Yeah.
All right. So Erica has a question. I'm sorry, but since Micole had that one last, I'll let Kevin take this one. Sorry. Erica says, how much does student loans affect your approval for first-time home buyers? And I would say this, you said first-time home buyers loan. There's no such thing as a first-time home buyer's loan. There might be such things as first-time home buyer down payment assistance, but necessarily there's not. FHA is not for first-time home buyers only. Like there's no first-time home buyer loan. I think some people think that there is and there's not. So just for in general, and I'll say this, and I do have a video on my channel about it. For every loan that you get, student loans are handled differently. But I'm gonna let Kevin take the question first because I know he closes people with student loans all the time, and then Micole to take it. Go ahead.
So it's going to vary from program to program. I'll just go high level. If you have a payment plan already set up and it's FHA, you're using FHA, VA, or conventional, they may use that payment plan that's set up if it's income-based repayment plan. If not, then there's no payment plan on your student loan debt. For FHA, they use 0.5%, whether you're in forbearance, in deferment, still in school and in deferment. So that's going to matter. Conventional, they use 1% typically on like a Fannie Mae product. Freddie Mac can use 0.5%. But it's also really going to vary on how you're set up with your student loans, your student loan payment, because they're only going to take certain ones. USDA is probably the most flexible with student loan debt. And with VA, if you can show that you're going to be deferred for at least 12 months after the house closed, then you can use the zero payment.
Okay. Micole, you want to add anything to the student loans?
He covered it.
Okay. But I want to say you can still buy a house with student loans. So don't wait. Like Micole said earlier, go ahead and get approved, right? And see where you stand, because it could be that, and the lender will help you, whether you should come out of deferment, that sort of thing. They're going to tell you what's going to make the most sense for you. So don't be afraid because you have student loans to go ahead and get approved for sure. Thank you, Erica. All right. Chastity Pope says, for being a first-time home buyer, can you qualify for new construction? I'm looking to get some info on purchasing and don't know where to start. Yeah. And so new construction, I think people feel like new construction is like, oh my God, can I do that? The same way you would qualify for new construction would be the same way you would qualify for a resale. There's no difference. But what Micole was saying is that right now they're offering a lot of incentives with new construction. So do you want to add to that, Micole?
You're absolutely right. There are different price points for new construction. So there is no caveat to it for you with you being a first-time home buyer. You just have to, it's just once you're pre-approved, you only look at the new construction homes that are within your qualifying range. So
yeah. So everybody's clear. It's not like you have to be like a special type of buyer or something to get a new construction home. If you're qualified for 400,000 and there are some homes available for 400,000, then you could find that. If you're qualified for 200,000, there may not be any new construction for 200,000, and you may have to do resales, right? So you want to, just meet with the lender or a real estate agent, to help you kind of figure this out. But you start on my channel, Chastity, because I have all of these videos to help you. That's where you start. All right. Thank you so much for that question. All right. Georgia Dream, Kevin, take this one. Is Georgia Dream loan payment? And this is just one. We're going to do quick because everybody's not from Georgia. Is the Georgia Dream payment included, or there's two separate payments? Explain how that works.
So with Georgia Dream, there's a second, but it's a zero payment second. So it's a lien against your property. So if you ever sell or refinance, that loan is paid off. So no, there's no payment on the second like some other payments. Typically, those are national down payment assistance programs that have the second payment. But Georgia Dream, no.
Very good. Very good. All right, let's hide this one. All right, Big Boss is back. He said, I make 90,000 and was told I don't qualify for down payment assistance programs. Is that true? Should I be trying to buy a house when I'm broke? Now let's talk about this, Big Boss. Why are you not saving some of that 90,000 for your down payment? So I'm going to say a little bit about this. I think there are income limits. They have increased them though, honestly, in a lot of states. They have increased the main payment, but if you're by yourself and making 90,000, then they assume, right, that you can save some of that for your down payment. If you making 90,000 and you have 4 children to take care of, then they, it might increase where you need to make, you can make more than that. But it really depends on the program. So nobody wants you to buy it broke, but I think they want to try, at least with most of these programs, for people that are making significant amounts of money, or usually it's over the median income. So if the median income in your area is 50,000 and you're making 90, they're like, okay, you're making a lot more than the average person in the area. And so, that's how they make the decision as to what the limit would be. Otherwise, if they had no limits, you could be making 200,000 and say, oh, let me get this $10,000 in assistance, right? So there has to be some kind of, maximum. So it really helps the people that most need it. But I'll let Micole add on to that.
I was going to ask him what state he was in.
Oh yeah, Big Boss, put what state you're in so we can know.
He got a big car. He got the name Big Boss.
Right, exactly. It's Big Boss. Right, a big car. Making close to 6 figures. You probably do a little overtime. You're right at 100,000. But yeah, Big Boss, tell us what state you're in, and I'll come back to you. Okay.
Because that may have an impact on why he didn't qualify, because I'm not familiar with the assistance in all states. So,
yes, Clark said, are you with NAREB? I said, yes, I am, Clark. And we talked about that a little bit before at the beginning of this, but thank you. I'm with the Empire Board as well. All right, Jersey City is present. All right. Let's see. Next question. Happy to have haters. Not happy to have haters. All right. I was encouraged to take a higher rate to get a grant. I was told I could refi after 6 months, then 9, then 1 year. Now there's increases. Do I have any legal recourse? And I'm not laughing at you. Happy to have haters. I just think nobody can guarantee that you could refi because nobody knows what interest rates are going to be in the future. So let's talk about this. And none of us are attorneys. But I'm pretty sure at closing, they didn't guarantee that you could refi in 6, 9, or then 1 year. They probably said, the earliest you could refi, because legally you can refi. You're going to refi to a higher interest rate probably. So you could refi, but the refi is not going to be, probably beneficial for you with the interest rates as they are. So go ahead and take this one, Kevin. You're smiling. Please take this one.
I'm smiling because Big Boss says she's a lady in Atlanta. So
Big Boss in Atlanta. Y'all about the Big Boss. So Big Boss, you might qualify. You better reach out to them.
Yeah.
So I wasn't there, so I'm sure the conversation probably went like this. Well, I'm a first-time home buyer, and I want my down payment assistance. What can I do? I want this grant because I don't have the money, or I want this down payment assistance. So they gave you the option of, hey, if you buy, you'll have a higher rate, but you won't be bringing a down payment. And when it's time to refinance, you can refinance. It could be 6 months. It could be 9. It could be a year. But in their mind, they just heard the refinance. Typically, that's what they hear. Because like she said, nobody can guarantee it. But the good part is you have the house.
Yeah.
Right? You've got the house. As things go along, it may not be a year. Let's say it's 3 years. Anything you can do to decrease your payment, helps. Over the course of time, if in 2 years you're still in position to refinance and you can get a lower rate, you still have the house, because I'm sure that same house is probably going to be $50,000, $60,000 more later on. So technically, no, you don't have any recourse.
Okay, Micole, you have anything to add to that?
Yeah, I think it's very similar. I think, Kevin, I think it might have gone like you can refinance. Go ahead, encouraging, because if it was if you got a real estate on one side and a loan officer that wanted to push a sale, which we have that type, right, in our business, unfortunately,
right,
to get her to do this so she could go ahead and buy a house and just make her think that would be an option for her soon to get her out of that situation that she probably didn't want. But like she said, encourage. That's my opinion. But either way, it was the decision you made. Happy to have haters, regardless of whatever they did to encourage you strongly, whatever. Unfortunately, like Kevin said, you don't have any recourse, because there are nobody guaranteed you that you could that you will be able to refinance.
All right, and let this be for everybody that's on the right now. We're at exactly 200, so hopefully we have 200 likes. So I'm gonna stop for a moment. Make sure y'all like and subscribe. If you're not already a subscriber, make sure you like. But let this be a lesson for everyone. On my Instagram, I do like little videos, and I've done 2 on this recently, because we're getting to the time when interest rates were increasing, like 2023, 2024, and everybody was like, oh, you just refinance. But you only can really refinance, or only makes sense typically to refinance, once rates are at least a point or so. So if you're not at that point yet, you're going to have to live with that payment. If the only way you're able to afford a house, right, is because you think, I'm going to I'll get through this 1 year and I'll refinance in year 2. That's not guaranteed. We don't know what's happening. Something in this new administration, something new is happening every single day. There's no stability. So you don't know what's going to happen year to year to year. You can hope, and hopefully, we're at some of the highest rates, but we don't know that. So you have to be comfortable with the payment that you sign a day of closing. Be comfortable with that, because you don't know when it's going to change. Hey, little Kevin, we saw him. All right. All right, let me hide this. Good question, though. I love that question.
Bend down.
All right, so it says, the Buffalo Soldieress says, what are we doing to teach children of parents who own a home to keep the home for another generation? Many of our homes are being taken from us. Well, I have this channel, so I'm trying to educate as much as possible. What do you feel like, as parents, that we should be doing, or, what should we be doing as a community to help keep more homes in the family? Because people are losing their homes, because once, that person passes away, there's not, the proper things in place. I've done two or three lives actually on just trust and wills. So please watch those replays. But what do you think, Micole? And then since you had a time, your son was right in the area. What are you telling your sons? Go, Micole, go first, and then Kevin.
Yeah, I don't have kids, but you're right. We have to, this is more of, and I saw some of the video you did with Tua, Attorney Barley, about that, and the living trust is huge for maintaining home ownership after the person who owned the home has passed away. Because even with on the mortgage side of it, them being just on the title is not enough. And I think that's a huge misconception. It will still go to probate. And if you don't have that will in place, or preferably the living trust, then you're gonna have to go through all the hoops and obstacles of doing whatever is needed to keep the home, because all the situations are different. But I mean, we just really, the parents need to prepare the situation for the kids. I mean, let's just be honest. You have to have all of your ducks in a row for when you are gone, so the child doesn't have to try to figure it out. That's just my personal opinion. Yeah.
All right. What are you telling your kids as far as, leaving, maintaining, wealth, maintaining the home? Are you telling them anything now? I know you have two sons, right? What are you telling them, Kevin?
So I already told them they can't sell their grandmom's house. So they can't sell my mother's house. My wife and I, excuse me, my wife and I are putting them, getting everything in a trust. And then we're going to try to be as specific as we can with what we want to do with the properties in the trust. In terms of what are we telling them, just the importance of home ownership. They've always lived in a house. They've never lived in an apartment.
Mm-hmm.
They never rented. Well, they did for a brief second when I moved to Georgia, but we just have conversations with them about the importance of real estate, the importance of owning home ownership. And my oldest has been to closings with me. Like, I remember carrying him in a little carrier because I didn't have anybody to watch him when I went to closing. And then when he's about 5, he went to a closing. So they've been to closings, they've been to showings, they've been to our investment properties, just get them to see it. And they, one of my sons did a video mocking me about interest rates going down. So they hear us. But at the end of the day, I agree with Micole. I think the parents need to set it up for the kids, or the kids can guide the parents on how to set it up for them or what their wishes are in the end. Because the biggest thing is, in our community, we lose the home because nobody wants to pay to get things rectified.
Mm-hmm.
But everybody wants to check when it gets sold.
That's very true. That's probably a whole nother live, but I will put those videos that I've done with Attorney Barley in the description of this video. It's all about wills, trust, how to set that up, and how to protect that wealth. I do want to say this. When you talked about the closing, I thought about this. When I tell you, and this, y'all can share your experiences for closing that you've gone to. Black folk, we dressed up. We got, we ready to go. When I say white folk come to a closing with jeans and a flip-flop and a t-shirt, they don't dress up. They got, even their agents are more relaxed. Like, because it's so, it's not like a big deal, I guess, it's kind of standard. It's like, oh, we're just buying a house today, no big deal. Like, we are, so it speaks to that 45% of, not only 45% are owning homes, right? So that's a low number, but also a lot of people aren't growing up in homes. So when that one person's able to do it, it's like a huge deal. I would like it to be more, routine for us. and not be such a big deal. Like, oh, I'm just buying a house today. But, because home ownership is still such a big thing in our community, like we come in dressed to the nines and, we're taking pictures, we're making videos, we're, doing everything because it's still a big deal. I would like it in our community to be a little bit more routine. And, by bringing your child to a closing and by letting them see it, they're like, oh, just bought a house today, no big deal. But are y'all seeing the same thing, like in comparison? I know I always, pay attention. Even the closing attorneys, they're just like, oh, no big deal. But, it's still in our community a very big deal.
Yeah, most of the posts are, prayers and, how.
Hallelujah.
Yeah, and, basically testimonies about how all the things they went through or how they didn't think it would happen. It's, and I really didn't think about it that way as much, Shahida, but It is normally more of a, oh my God, whew, I did it, not more of an assume, oh yeah, I bought a house.
If we can almost normalize home ownership, right? Where it's just they have fully normalized it. When I say, I make no jokes about it. Like they're in holes, jeans, and flip flops, and closing not 50 million, but like $700,000 properties in very low key, very like chill. It's a huge difference. I just wanted to point that out. Anything you want to add to that, Kevin?
No, I couldn't stop laughing because one time I went to a closing and the guy was like, "Man, I had to wear my church clothes here." I was like, "What? Your church?" We equate everything to church, so it's like it's not like you dressing up. It's like I got on my church clothes because you dressed up.
We need to normalize, the home ownership process. The more of us that do it more routinely. I think it is. I'm not saying it's not a big deal, but hopefully we do it more, so much more often, right? It's not just like a huge deal anymore where you're like the first person in your family to get it done. All right. Question, Uplift. What is the recommendation for housing as percent of income? Has it changed considering the new economy? I'm gonna let y'all give y'all government answers. I'm gonna give my answer because y'all have y'all DTI ratio answers. My answer is 25 to 35% of your your net income, because I feel like too many people are spending too much of their take home pay toward their mortgage. So that's just be as conservative as possible. Assume that you're going to get laid off in the next 5 years, and can you still be able to pay? Honestly, be very conservative and don't push to go above your budget. Leave room for life to happen. Leave room to invest money. So try to be as conservative as possible. Just because things are more expensive, it doesn't mean now you can spend 60% of your take-home pay on a house. So I say be conservative. I'm gonna let y'all have y'all government answers. Micole. Y'all can do either way. If y'all want to do the government like FHA or whichever one y'all want to do.
I think that, I could give you the guidelines, but when I talk to a client, it's like what Kevin said in the beginning, to the point of I ask them where they want to be payment wise. So I think that percentage is different for each buyer. Of course we have our maximums that we can't lend no matter what you want, but you should know what your payment range is for housing. And you got to remember, housing is not just your mortgage payment. Of course, you have HOAs, but you still got to keep your utilities in mind. Anything that comes with your housing, whatever that is, stay in that range. If you don't want to have a $3,000 car note, and you want to, have a car that's $300,000, and you're willing to put a little bit more towards your mortgage, to the mortgage payments, to have a bigger house, I'm fine with that. It's just about readjusting whatever works for your personal lifestyle. So I don't have a set answer for that percentage. I never even heard you say that, Shahida, but that's a new one.
Yeah,
the net is what you qualify. The net is what you live off of.
Yeah, that's what you live off of. So in my finance videos, I go low because because I don't think people really think about everything else they have to pay for, and then the mortgage becomes more of a burden than
Yeah.
it's like, oh, I didn't know, or I need to refinance and all of that. I just want to be, because a lot of us talking about, for Black history, we're not invested. We don't have no money for retirement, and then your house is all you truly have. And, you can live in your house and that'll be free, but can you eat? And can you do other things that you need to do? Can you send your kids to college? Like, you have to think it all through. It can't just be, I have the house. It has to be, I have a house and I have retirement, and, I'm good in other areas too. Kevin?
It's no black and white answer for me. Typically in our community, we make less money, right? So we may not be able to afford a house, period, if we use 25% of the income. But again, I go, huh?
I said 25 to 35.
25, 35. My bad.
35,
my bad.
Yeah. Gross. Take home.
Take home.
Yep.
I do ask my clients if they can afford the payment.
Yeah.
Like like there's things that we don't see. Some of us take care of our parents. Some of us not me, but they got kids in college that they help subsidize that we don't see. Sometimes they go at the higher amount because they have a second job that we can't count. So like, it's a lot of variations. There's a spouse that may not be on there, so there's a second income. So it just kind of all depends. And then I want to explain something. I want to ask you something. Are you talking about their total debt or their housing debt? Because there's two different things. In terms
of 35, the max 35%. I'm just saying, if you make, of your income that you bring home, like the money that after you, like, they take out your health insurance and your taxes and all that. And I know that's not the mortgage amount, but that's what I'm talking about. Because, and I say this, like you said, it's going to vary for everybody because people have extra money. But I know a lot of people in our community say, I don't know about you, Micole, but I know Kevin's done a video about the percentage of his clients that are single parents. Yeah. And a lot of us, I'm not a single parent, but all of my sisters are, and they've all had homes, and they qualify with maybe the child support and that sort of thing. But if you don't get that, I just want to be very conservative, and you need, like you said, you need to think through all of those things before you get your mortgage. So, if you go higher than that, that's fine. And I kind of explained in the video why I say that number. But if you go higher than that, that's fine. But you need to make sure you've thought everything through and you're still able to do it, even if you're doing it on your own. Because not everybody else has a spouse or, that can cover them if, something happens.
Right.
Anything else, Kevin? And what percentage, because I think, in our community, since this is a Black History Live, they said, I don't have the data in front of me right now, but that, more single, especially in our community, women are buying homes. Does anybody have that number? Like percentage?
I did a video on it.
Buyers, who's like buying them?
I did a video on it. Gosh, it's I think it's like 2 million it's like double the amount of women. I'll put it in the chat when I find. Okay. So, but single women are outpacing single men in purchasing homes by a huge statistic, because I heard something today that I never looked at it as. Men look at where I can lay my head. Women want comfort and safety. And stability. Stability, yep.
Stability, yeah. I agree with that. I definitely agree. Yep. Like, before I got married, I bought a house because I wasn't waiting on him. I was like, "We getting married? What's happening? Oh, I'm buying this house." So, and then as soon as I bought the house, we're gonna get engaged. And I was like,
my man, that's what I'm talking
about. Maybe a year after the house, we got engaged, and I was like, "We gotta sell this house and get a new house now." Like, he could have, if he did it right. He did everything out of order. But when they see you moving on, are you doing? You buying a house? They start, acting right. All right, so. My husband probably watching the live. He probably just gave it a thumbs down. All right, everybody likes the live to make up for my husband's thumbs down. Kevin, real quick, are you working with people from New York?
I would love to, but New York is hard. New York state of mind. In terms of New York, like, our company's been trying for 3 years to get in New York. We just gave up.
Long, right?
We just gave up. But I can refer you to someone who does New York that I used to work with. So if you want to reach out to me to get a recommendation, I got you. But New York is hard.
Okay. Okay, here's a good question. Most Sim says, what are your thoughts on using a HELOC to purchase a second property? I will sell the first property. Okay, but why use? I don't know. And how best to get a mortgage after using the HELOC as a down payment? Thank you. Who wants to take this? I don't know who does more of these or not. Any?
I gotta read it again. Okay.
Yeah, he said he wants to sell it. I guess he's going to use the HELOC, then sell it. Use the HELOC for the down payment, then sell the house.
Oh, okay. Take a HELOC out to purchase the second property.
And then I guess you're going to sell the first property.
I gotcha. I mean, well, if you do that, then you still have to qualify with both mortgages, right?
Okay,
so I think that's the way I'm reading it. So she wants to.
I'll take it down so we can see your face, but yeah.
Oh, I'm sorry. Yeah.
Okay, so he's saying I'm gonna take and you guys, for a HELOC is a home equity line of credit that you can get, like borrowing from your house, but you have to start making payments on that money, and you still have the mortgage. You have the mortgage and the HELOC payment. So I guess your income would have to qualify for it. What do you want to say, Kevin?
Yeah.
So you can do it. You can pull cash out of a home equity line. You can pull cash out of your first house to use as a down payment on the second one. Typically we do it as like a bridge loan. But I also have had people pull cash out to buy a second home, and it was an investment property. You can do it. Just know that you have to be able to qualify for the first mortgage, the second mortgage, which is the HELOC, and the new mortgage that you're going to get, and then try to sell. So if you can handle, if you can handle all three payments, what you say?
I say because they'll be holding all of those properties at the same time.
Yeah, if they're holding them at the same time. If you're just going to pull the cash out of the, if you're going to pull the cash out of the first, why is my question? Because you can use the proceeds when you sell it to buy the second home. So you don't have to have that down payment right away. You can, if your house is under contract and you're going to get money back, then you can take that money from that closing and go to your next one and buy the second one. So it would all depend on your reason for wanting to do the HELOC, because the interest rate on the HELOC is probably going to be 10, 11% interest only. So your payment's going to be way higher.
And you got fees, so it would make sense to just get a new loan if you're only using it for a down payment. Unless the only reason would be if she's trying to buy that one before she sells the first one for whatever reason.
All right, I have all of their information in the chat. I'm going to repost it because you may need some more, information for that one.
Mo said no mortgage on the first property.
Oh, he did. Okay,
well, that's different.
So then you're probably refinancing that property and not a HELOC. It would be cheaper to refinance payment wise.
All right, so reach out to either one of them and they can help you some more with that. Joseph is saying, now Joseph, I'm going to have just to I guess reset who these people are. Micole is a lender with Movement Mortgage, and Kevin is a lender with let me not say the wrong thing.
Summit Funding.
Okay, I make sure I have the right one. Joseph looking for a mentor because he wants to buy a rental property. They can't mentor you, but they can do your loan. Are y'all doing mentorship?
I can run the numbers for them. That's about it.
Yeah.
Right. So they're a lender. So they'll be able to help you, finance the loan for your rental property. So yeah, reach out to them. The information, those of you watching the replay, the information is in the description. Those of you that are on live now, all the information is in the chat. So go ahead and copy that. Thank you, Joseph. Thank you for joining us, Joseph. I let Micole take this one. Why did my mortgage lender tell me to find a house before I got approved?
I have no idea, Nikki.
Micole said, I don't know.
I don't understand that. Why would they tell you to find a house before you got approved? That doesn't even make sense. No, that's the wrong order. I mean, how can you? You don't even know what you're supposed to be looking for if you don't know how much you qualify for. So that's the wrong order. So that you have the wrong lender. I'm sorry.
Get a new lender. Kevin, you agree?
Oh yeah, I agree. She probably keep her rate.
Get a lender. They being lazy. That's what I said. They being lazy.
Yeah.
They don't want to run your numbers.
Being careless.
Yeah, so don't do that. All right, so we're at 8:00. Y'all, can y'all stay a little bit longer, like 15 more minutes?
Oh yeah, I'm good all night.
Not all night. We can do like he want to do a telethon, a marathon.
Right.
We have 223 people on the live.
Wow.
They said they're gonna take your questions, so I'm trying to get through. I'm gonna put a number on them. I'm gonna take 10 more, so I'm gonna take the 10 best questions left in the chat. I do want to say I'm sponsoring this live, so buy my masterclass. I do have a first-time home buyer masterclass sponsored by Shahida Hill. You'll see the link. Do not buy your first house without my masterclass. Okay, so go ahead and get that. Please get it. All right, so we're gonna do our 10 questions. All right, and hit the like and subscribe button. As soon as I get off of here, I know how many people are on here, and then I go look at the likes, and they don't match. So there's 228 people on the live. I need 228 likes. So hit the like button.
Right.
All right, thank you, everybody. All right, so I'm going back up so we get these last 10. Let's see. All right, happy to haters. All right, I'm going to answer this question. This won't count as a 10. All right, Lisa Williams says, is there a list of down payment assistance programs and how does it work? Is it by county and state? So there are some national programs and then there are some by city and state. So I have a video, I have a live, I'll put it in this, the description, and I have a link to a list of everything in your state. But if you're looking for like a national program that, they may be able to help you with that as well. But they do have a list of all the programs available in Florida. I'll put it in this video as well. But there is a list that you can look at and see which ones you qualify for. Every single state has down payment assistance programs. All right, so good question. All right, Big Boss is back. So I'll make this one of the three. How long, because Kevin said this, I'm gonna go to you. How long do you recommend dating the rate, Kevin? I went to my credit union and was told $350 for a $350,000 house. It would be at 6.2, no PMI. My mortgage would be $3,300. It's hard to wrap your mind around that reality for 4 years. So how long should he be dating this rate?
Until rates go down. Like, that's the thing. Like, you're not the best way, I guess the best time to refinance is if it makes the most sense if it drops at least a point, 3/4, right, of a point. That's where you'll see a difference. But something that they fail to tell you is when you refinance, you have to be refinanceable. I mean, you have to qualify to finance again. And that's where people fail. They get the house, they heard us say don't buy the car first, and then they go buy the car. But you'll be dating the rate until rates change. And there's no crystal ball. You
might marry it.
Yeah, you might marry the rate.
Dating might be marriage. All right, but that seems high. Does that seem high or not high? 330. That seems regular. That seems legit.
It's no MI. Look, it's no MI on it though.
Oh, okay. Yeah.
So that's probably why she got the 7% interest rate.
Yeah, sometimes when you're doing the no PMI, then your rate is a little bit higher. So yeah, it'd be hard to wrap my head around that too. You're making $90,000. I don't know what your take-home pay is, but yeah. So what Micole said, I think they both said this. We got to know what our expectations are, and I don't know where you live. And 350, you have to either come down on that price. I don't know how much rent is in the area. So you look at all of those things, but if you want to buy, you may have to, come down. You may have to not get that from that credit union and try to get a lower interest rate because they do have lower interest rates with different programs and see which one would make sense for you. Thank you, Big Boss.
She's in Atlanta. Remember?
I thought she's in Atlanta. Sorry. All right. So you just reach out to Kevin and Micole and see maybe Georgia Dreams. The Georgia Dream rate is like 6%.
5.875.
5.875.
Well, 5.875. So maybe you can do that. Hopefully, like you might, reach out.
And she can, if she's going to be in the city, she could get Invest Atlanta. She's at 90,000. She's under the limit. So yeah, you just need to reach out to both of us and see what we can do for you.
All right. Good question.
I'm gonna give y'all Micole's number. It's 470-485-6267.
Both of their numbers are in the chat. All right. All right. So this is question number 2 of the 10. And let's see. What are your thoughts on? Oh, that's Big Boss again. Big Boss, you need to get a conversation. I'm skipping you, Big Boss.
She needs super chat.
Yes. Oh yeah. Or you need to super chat us some because you getting stuff for free. All right. The Buffalo Soldieress, is being on the title the same as being on the deed? Micole.
No.
It's like Jeopardy. Is being
I
on
know, right?
Yes,
right, so it is. Because you're not on the note. Being on the note is you're on the loan, but being on the deed, yeah. Right. Am I right, Kevin?
It depends on if you're a title or deed state.
Oh, okay, yeah. You're talking.
Yeah, but it's the same thing. They're interchangeable.
Yeah, they're interchangeable. I think I had a attorney on, I think 2 weeks ago. We talked about deeds and all that kind of stuff. So watch that replay. But basically the title is all the deeds. So when people are talking about the chain of title and all that kind of stuff, they're talking about all of, the people that have owned the house prior, that sort of thing. But for the most part, people use those two things pretty interchangeably. But remember, you can be on the title or deed and not be on what, like Micole said, on the note, right? So you could add somebody to your deed, but you're not on the mortgage. All right, good question. That was number 2 of 10. All right, let's see. Kevin is the second person asked if you work in New York. Sorry, the answer is no. That won't count. The answer is no. All right, I'll let Micole take this one. When does new construction make sense?
I mean, that's the preference situation. I mean, if it's something, if you can't find what you want on a resale level, some people just like new. I mean, hey, that's really if you can't find something that's being resold in the price point you want, in the area that you want, then new construction. I don't think you should just do new construction just because they are giving a lower rate. I mean, you got to think long term when you're buying a home too. Is this the area you want to live in? Is the community you want to live in? That's the same thing with assistance. Don't just take the assistance if that area doesn't match your lifestyle, doesn't meet your lifestyle. It has to make sense.
All right. I'm trying to put Crown's question all together because she put things in different areas. So I'm gonna have Kevin take this one first. So she is a teacher. She's making $58,000. I'll try to read all of them together. Hi, I live in Tampa, Florida. Hi, I live in Tampa, Florida. I'm currently an educator and make about $58,000. I've never been a homeowner, so I'll be considered a first-time home buyer. I'm a single mom of 1. Went through a lender, was granted 200. And I say granted like somebody's giving you something. You qualified or you got approved for 200,000. Another program, 178,000. I have a car loan on my credit of 24,000 and student loans. That's it. What should I do? Those amounts do not get me anything. Like basically she feels like she can't qualify for anything because you only qualify for 200,000. So far, I've saved 14,000. Very good job. Should I buy an apartment and continue to save? I think should I keep on, renting an apartment and continue to save, or what should I do? Keep searching for assistance programs. Go ahead. I'll let Kevin take it. I'll say what I think at the end.
Did she say she was in Georgia?
No, she's in Tampa, Florida.
Oh, Tampa, Florida. So I would check into, I can help in Florida as well. So I would check into some sort of down payment assistance program. Typically in those programs, teachers get a little bit more than the typical person. But it's just all going to depend. So the other thing is, what's the status of your student loans? You know, if you got 200,000 worth of student loans and they got to use 0.5%, that's $1,000 a month payment that we have to use. If you're going conventional and it's, 200,000, that's potentially $2,000 we have to use. I really would have to see it. I think Micole may say the same thing, but at the end of the day, $200,000 in Florida with increased insurance and taxes, making $58,000 a year, that's probably about your max. You're probably using 56.99% of your DTI combined, just because we're not going to lend you more than you can afford. And that what they approved you off of is off your gross and not your net. So you're probably maxed out.
Yeah.
And it could, let me try to give a little bit. Hey, I used to be a teacher too. And back in 2020, when I stopped teaching to do YouTube full time, I was making 70,000. I was married, so we had 2 incomes, but I would say that, and I think at the time I qualified. Now home prices were a lot different. I think we qualified for like 275, and that was both of us together with our student loans. I think we had car payments at the time. But one of the things I knew that I had to get out of teaching, because I knew that my income wouldn't change very much from year to year. So I had my real estate license and I needed to use it, right? Because I wasn't using it. So I knew that I could make additional income through real estate. I got on YouTube and here I am 5 years later and I'm making way more money than I ever could teaching. So I would say, even though you are making that now, I would, if 200,000 is not going to cut it for you, I want you to think of other things you could be doing to increase your income while you're teaching. I didn't quit until I was like, this was like on firm footing. I didn't quit my job. I went from full-time teaching to part-time teaching, then I quit. Just to make sure everything was going to be, I was going to be able to make this money, right? So I would, for everybody, try to make more income. I know all of us, right, are basically in commission jobs for the most part. We don't know, we're entrepreneurs. We don't have a set income every month, but what's good about teaching is it's guaranteed. You're going to get that 58,000 every year. It's going to be stable. You're probably not going to get fired for anything. It's a very stable employment. However, it's also very stable, too stable, because you can't, grow it on your own. If you work harder, and this is the problem I was having, I was killing it. I was a good teacher. My kids were passing at like 98% or whatever, but the lady right next to me doing nothing was getting paid the same 70,000, right? So it wasn't that my extra efforts were getting me more money. So when you're an entrepreneur, even if you're doing it on the side, everything you do extra could gain you more money based on the effort you put in. So I would just encourage you, you have to have a degree to teach. So you have that information, see what skills you can put to use in, through social media, tutoring, like selling your lesson plans, whatever you can do, I think to increase your income, go ahead and do that. All right. Good question though, Crown. But I'm gonna leave this question for Micole, because Micole, we also have a bankruptcy and video on the channel. That's real old. But Braden says, if a bankruptcy has been dismissed or discharged, how old does the bankruptcy have to be on your report before a person can apply for a mortgage?
2 years discharge on a Chapter 7. And you can technically purchase while in a Chapter 13 after being in it for a year. But, to me, it's kind of catch-22. I don't know how Kevin feels about it. It's like you got to get the permission from the trustee. And the trustee, last time I tried it, they want a contract to get permission. And I can't give you a pre-approval without the permission.
Okay. All right, Kevin,
so that's kind of like, yeah.
Yeah.
But Chapter 7 is the one that's more common, and it's 2 years from the date of discharge.
Anything you want to add? We might get to all these questions because I'm only on question number 5, I think. Go ahead, Kevin. You want to add anything to bankruptcy?
Yeah. So I just have a conversation up front. I can give you the pre-approval, but I want the agent to know. I want to make sure the agent tells the listing agent we're under contract. However, we're not closing in 30 days because the borrower the only way they can get into court and get a date with their trustee for an approval is if they have a binding contract, which is in reverse of what it should be. So once you have the binding contract, depending on how fast or long it takes, it could take an extra 30 to 45 days to get in with the trustee of the courts. And typically I've done quite a few of them. I've always had them approved. I just make sure I set the expectation up front that it's no rush. So you're not rushing to court. And there's certain things you can't do until the property is approved. Until you get the approval, because you don't want to waste the borrower's money. But it can happen.
It can. Everybody has to be on board, right, Kevin? That's basically what we're saying. Like everybody has to be on board.
All right, good question. All right, from Nick's Kitchen. This is question number, I think this is 5. I have a condo in New York. Neither one of them does mortgages in New York, just FYI. And I want to buy a rental property. Any suggestion on how to move the process along? I'm assuming that you want to buy a rental property in the same state, or you want to buy it somewhere else. You need to get pre-approved for the rental property, right? Like you probably need to ask a more detailed question, but what do y'all want to add to that? Micole, then Kevin.
Yeah, you definitely have to get pre-approved for the rental property, and rental property, investment property, higher down payment, higher rates, and you still have to qualify with the primary residence. I'm assuming if you have a condo, so with your primary residence. So investment property is not for the weak of heart. I mean, you hear a lot about investing in it. And if you can do it, that's great. But you have to have reserves. You have to have a larger down payment. Like I said, the rate is much higher. So you have to be a pretty well qualified buyer to purchase investment. And I just want to say that because I feel like it's kind of it's kind of underplayed as far as that part of it. A lot of people make it seem like anybody can just go out and buy an investment property, and that is not the case.
Watching them TikTok folk and that Instagram reels, thinking you're gonna buy it for $1 and then make $200,000. All right, Kevin. Anything else?
Nah.
Okay.
I can tell a story, but I won't.
If y'all want to go to the after party gonna be going. I've been trying to tell Micole to get a YouTube channel for like the last 5 years, and she's yet to do it. But Kevin does have a YouTube channel. Kevin, put it in the chat or give it to me so I can put it in the chat. Y'all want to do the after party? After party gonna be on Kevin's channel. Big Boss did buy my masterclass. Big Boss, this will help you. You got a lot of questions. This is gonna help you a lot.
Yeah.
All right. Uplift, your question number 6. Uplift, do you recommend a rehab for a first-time home buyer? I'm going to say my 2 cents, possibly. But you have to be mindful with rehabs that it has to pass, like especially if you're doing FHA or some conventional loans, it has to be livable. It can't be like a full, you can't have major issues with it if you're trying to do like an FHA loan and some conventional loans as well. If you're going to occupy that property. If you can figure out, to do a 203K loan, that could be, but they are complicated. I have a 203K playlist on this channel, so you can watch that. But it's just, you have to be mindful. It has to be more cosmetic rehabs than it needs to be like your roof is in, you don't have, appliances, the bathroom, like it can't be major rehabs for the most part. Micole, Micole, I think I lost her. Kevin, help me out. Do you recommend a rehab for a first-time home buyer?
Yes. I think it's not a bad option. I think that it allows for you to sometimes get the the ugliest house in a nice neighborhood and do forced appreciation. But again, the rehab loans are not as easy as TikTok and Instagram say. There are some steps. And the other thing is, so we talked about in the beginning, how do you select your lender? Well, if your goal is to do a rehab loan, if a lender hasn't done one before, he or she is going to fumble through it. So you want to get with the lender who has experience with rehab loans because it's a very tedious process. And again, it's not going to close in 30 days.
All right, good question. All right, this is question number 7. I'm sorry, we lost Micole. All of Micole's information, she might sign back in. Probably she's going to sign back in. So hopefully she's able to see us at the end. But we do have 3 more questions we're going to take. Kevin and I both answered this question 50 million times. So let him take this question. I have multiple videos on this subject. I'll put them in the chat of this too. Go ahead, answer this question, Kevin.
How does pre-approvals hurt your FICO score? From 0 to 5 points. But it's not necessarily hurting your score because you're asking us for hundreds of thousands of dollars to borrow. And I always use this scenario. If I came to you, Ellen, and I asked you if I could borrow $20, what are you going to ask me? What you need it for, how I'm going to get it back, when I'm going to get it back. That's the same thing we're asking about our $200,000. Can you pay it back? Are you eligible to qualify to pay us back? Don't worry about your FICO score in terms of getting pre-approved. So like if I pull your credit today and then you go to Micole and she pulls it tomorrow, it's not going to drop your score. Yes, it's going to be a hard inquiry when she pulls it, but it's not going to pull your score down. The other thing is typically the score that Micole and I see is not going to be the score that you see on most of these apps that we have. So don't say, hey, you guys dropped my score. The score that you see is probably not your mortgage score anyway. So it's not going to hurt you. And no one can give you a pre-approval without doing a hard pull on your credit, or at least they shouldn't.
All right, good answer. And please watch. I posted like a replay of a video very recently about that topic as well. All right, welcome back, Micole. Welcome back.
We thought you started the after party.
Right, yeah, she went to the after party quick, but yeah.
My power got low so fast, I didn't even realize it was that low.
I figured you had to like probably plug in your laptop or something because we were here longer than we anticipated. Yeah, all right, I'm going to answer this question because Big Boss bought my masterclass. He said, what are your thoughts on HUD? I'm assuming he's talking about HUD homes. Like, I haven't seen as many HUD homes as I used to see in general. Like, so for everybody, just so you know, sometimes some of the FHA foreclosures may be listed on a HUD website, HUD.gov, and they'll have it by state, and you're able to bid on those homes. A lot of them do need work, and you're getting pretty much a 203K with some of those homes. But so I think it's a good idea. However, I've never won a HUD bid, so they're very competitive, and I've put in several, and I've never won. So I wouldn't count on it. Anything you want to add to like a HUD home, Micole?
I haven't done one in years.
Yeah, I don't think there are as many as there used to be for sure. I don't think there's as many.
Not in the Atlanta area, at least. I can't speak for other areas.
Yeah. I used to put in the bids for people to get them, and I never won one because everybody else was bidding too, and then they prioritize the bids as well. Kevin, you want to say anything about HUD homes?
Most of them are going to be a 203K or conventional Fannie Mae home style. I actually just looked at some this weekend for a client, and there are some in most of the states, but they're far and few in between. So if you do get one that needs repairs, you have to qualify to be able to renovate it. Because you qualify for FHA doesn't mean you qualify for a 203K program.
Right. And you got to find a contractor, and the contractor has to be willing to do the work with their own funds and get paid back by the lender. It's a process. Watch my trials and tribulations. I did a whole video on 203K. We did not close. Let me say that.
I remember.
Spoiler alert, we did not close. And we got very close. We got to the appraisal part, y'all. We still didn't close. All right, let me take that one away. We do have a super chat. See that?
Do we split those?
A super sticker. Say it again.
Do we split those?
No, we don't. Y'all don't get nothing. Y'all about to get clients. This is called cooperative economics. Y'all celebrate Kwanzaa. Let me tell you about Kwanzaa. There's part of Kwanzaa. One of the days is I don't want to get the Swahili name wrong, but it's cooperative economics. Y'all are on this channel. Y'all gonna get clients. I know y'all are. Because even from 2020, Micole, have you had a lot of clients? They're probably still calling.
They still call.
Yes, and Kevin too. Y'all, this is cooperative economics. Everybody doing it. We need to support Black business. We need to support Black YouTubers, Black lenders, Black real estate agents. So this cooperative economics. But you're not getting my $9.99 super chat. All right. I think we're only taking about two more. Let me see. Okay. So I think I have both of them because Kevin, you're a broker now, right?
Nah, I'm back to direct lending.
Okay. I can't do
but
that.
I can help answer the broker question.
What's the difference between a mortgage broker and a loan officer? Kevin, you go ahead and take it.
A broker. So a loan officer, a broker is a loan officer. It's just how they do your file, right? So they will get, Shahida will put in her application and I will look at it and see which company that I partner with that will that fits what she's looking for, or what she, or do they fit what she's looking for, right? So then I'm a broker to that company. They're going to process it. They're going to underwrite it. They're going to fund it. I'm going to be a loan officer who takes the application initially, and then I'm going to be at the closing. That's, a broker shops around to see what deals or where they can get you the best pricing or the best program for you. A lender like myself, I'm a direct lender. Our underwriting, processing is all in-house. We fund the deal in-house ourselves. I feel like as a lender, I had more control, meaning I could go up the chain and said, hey, we need this to close a little bit faster, or we need some explanation from the underwriter. So for me, while a broker may offer a better rate sometimes, they don't have as much control as direct lenders. And that's what hurts them sometimes. All
right. And Micole, you're a direct lender too, right?
I've always been a direct lender. I've never even stepped into that broker world. But I mean, I'm familiar with what it is, but I can't, I've never experienced it. But it's like Kevin said, I've always wanted to be able to have more of a personal relationship with, the people in my company. And when you do what the brokering, I mean, literally, it's just like a big shopping, you don't really have relationships with those people. You're shopping for different scenarios. So it's just a little bit less personal. And like I said, less control. And I need control. So.
All right. So we're into our last two questions. But Alicia did say, I'll catch the replay, but I finished Shahida's masterclass and taking notes in Kevin's home buyer journal. Two of the best. I feel more prepared to buy this year. Thank you for the testimonial. We got some products out here. So, please support us and get some of those. Thank you so much. All right. Delisa Nicole says, hello, I have an 800 credit score with essentially no debt. Very good. Yes. What rate should I expect right now with a conventional loan? I want to ensure I'm getting the best rate, even while comparing lenders. What do y'all think? Y'all give a range. Y'all don't have to give an exact number, but what in this market right now, what will be the range she's probably going to see? Because I think people think because their credit score is higher, that the market really doesn't matter. They should be getting a 4% or a 3%. They want to get those COVID rates. Yeah. But you're going to get the best of the available rates, I feel like now. So what do you feel like her range should be? Y'all have any idea, Micole?
I'm going to say high 6s, low 7s. But to be honest, I haven't priced one in the last few days. So, and it also depends on how much she's putting down. Are we just talking about a standard Are we talking about 3% down, 5% down? You know, there's a lot of different factors that come into play with that as well. But
right. And can you explain this really quickly, Micole? And I'll let you talk about it when you answer your question. Do you as a lender get rates every single day? Like how do you know what rates you're going to offer for the day?
I literally, and I'm sure Kevin's the same, we have what we call a pricing engine, so to speak. And the buyer's scenario is either, we're taking it directly from a loan application normally, and we it's going to run through that scenario. And so it gives the cost of a rate based on that buyer's scenario. So it can vary and they do change daily, sometimes hourly. So that's why I said I haven't looked at one in the last couple of days. So I'm not sure if I'm accurate as of where we are, because I know we had a pricing change this afternoon. So I would say high sixes, low sevens. But maybe Kevin has a better idea. She kind of putting me on the spot.
Okay. Kevin, you have any idea? And I want to tell a story about us real quick, Micole, and then I'm take our last question.
Yeah, about the same. High sixes, low sevens. And then are you doing a 30-year, 25-year, 20-year, 15-year? Like all of those matter in terms of the rate. Are you utilizing the 3% with Fannie Mae or Freddie Mac, which has different pricing? So first of all, congratulations on 800 credit score. That's amazing. But in terms of rate, your rate might be the same as somebody with a 640. You just may pay less for the rate. And that's what people don't understand either. So, but you'll probably be high sixes, low sevens. But whatever it is, just check and see. And, if you have a little bit extra cash to get a little better rate, see if that makes sense to do.
And I would say this too. Sometimes when you have a better credit score, y'all could correct me if I'm wrong, you might be able to qualify for more because your debt to income ratio can be a little bit higher. But if you're making $25,000 a year or $30,000 a year, it won't really matter that much that your credit score is 800. You're still going to qualify based on your income. So it's best to, you get the best options. The higher your credit is, you get the best option, the lowest the lower debt to income ratio. As those things get higher, then, you may not qualify for as much. So just be mindful of that as well. Okay, I want to tell a quick story and take my last question. So Micole was working with one of my clients over the pandemic, talking about rates changing. And, things were crazy during the pandemic as far as numbers. And I had a client moving from California to here. And Micole calls me and she's like, hold off on locking the rate. The rate went literally, I feel like it went from like 3% to 5%. It was something crazy. And she was like, the rate changed and it changed again. And then by like the morning, I think the rate had dropped back to the 3%. And she was like, oh, I locked it. Because I think it changed like multiple times for that day, because at the 5%, she couldn't afford the house. Like it was that big of a difference because she, she's moving here. She had retired from her job and she had called me and she's like, rates went up to 5% today. And I was like, what are we going to do?
Oh my God. Yeah.
Calm me down. And I think rates like the next day. So I did experience like rates changing like hour by hour or something crazy. You remember that, Micole? You probably don't remember that, but it was crazy.
A little bit, yeah. That's the worst feeling as a loan officer. When that happens, you want your buyer to get the best rate, and you definitely don't want it to be a situation where it prices them out of being able to qualify. So, like I said, when it drops again, sometimes we just have to make that call and we just have to jump on it, right? Like we can't take that chance.
It was like a huge swing. It was a huge swing.
Yeah.
It was crazy. All right, so this is my last question. I think it's a timely question. So for everybody else, Micole's information is in the chat. Kevin's information is in the chat. Kevin put his first-time homebuyer channel. Not first-time homebuyer, his YouTube channel. Also, we're putting all the things in here. I'll make sure I get everything. Sorry. I have to be my own little person today. All right. Kevin, tell them how they can reach you before we take our last question. Tell them how they can reach you. You can just say it.
You can reach me at kevin.jefferson@summitfunding.net. You can also call me at 470-485-6267. And please subscribe to my YouTube channel and watch videos. It's Kevin Jefferson / The People's Lender. Thank you.
All right. And Micole, tell them how they can reach you.
Email is, I didn't even put my email, did I?
I think you put everything. I'm saying we have cell phone, we have website, we have Facebook, But yeah, tell them your email.
Yeah, so it's Micole.Sudduth@movement.com. And what is this? Okay, now it's want me to do all this.
Yeah. And we will have everything in the description. So because this is timely, you guys, this has been a week, I believe. I had the question. I need to find it again. All right, let's see. What are your predictions? What are some predictions about home buying under the current presidency? So are we about a month? Are we a month in yet? When was inauguration? Inauguration was the 20th, right? So no, was it 20th? I don't know. We're not far into the inauguration. And like I said, there are a lot of executive orders, things coming down the pike. So what are some, I'll go first. I'll let y'all think about this a little bit more. What are some predictions about home buying under the current presidency? I think for the most part, things will be pretty much the same. I don't anticipate interest rates changing that much. So I think, don't think that they're going to drop dramatically because, I know he said, drop interest rates and that sort of thing. But you see like with the tariffs this week, how, the tariffs were on Monday, the tariffs were supposed to go in effect, yesterday, the stock market dropped. He worked out something with Canada, so a lot of things are threats, but they're not actually maybe going to happen. But because there's instability, because you never know when something's going to happen, like financial markets like certainty for the most part. And I think with this administration, you don't have that certainty. So I don't think the Federal Reserve is going to be like, oh, let's lower interest rates, right? They're going to be just checking based on what he's doing or the administration is doing. So I do feel like there'll be a larger wealth gap in America. And I feel like we're already, as African Americans, on the lower end of a lot of things, average incomes, home ownership, credit scores. There's a lot of things that we're not at the top of as far as statistically. And I think with some of the new things, we could, it could widen that gap. So I would say make sure you start paying attention. So if there's anything you can take advantage of in this administration, you do. But I think housing is going to not get less expensive. So I think if you're thinking that this administration is going to bring down the price of housing, I don't think that's going to happen. And I wouldn't wait on it happening. If you can take advantage, if interest rates do go down and you can refinance that, that's a good thing. But I just wouldn't count on it happening. That's my 2 cents. I'll go to Micole and then Kevin.
I feel the same way, Shahida. I definitely don't think they're going to go down. There's no indication that they will. If anything, we're going to either stabilize or increase. So you definitely have to figure out, where you can fit in based on where we are now. And just piggybacking off what you were saying when we were talking about the teacher, if your income is what your income is, and there's not a lot of probability of it increasing, then you do need to work on getting secondary income. We can qualify you with a second job as long as you work it simultaneously with a primary job for 2 years. So get a side, not a side hustle, but it has to be something that we can document. But you maybe increasing your income is going to give you more options here. We gotta readjust things here to make sure we don't miss out on our opportunities. We can't wait on change.
Thank you, Micole. And Kevin, I'll let you answer this question.
I don't think I don't think we'll see much change. Maybe a correction in housing. But in terms of interest rates, like he doesn't control the interest rate. And what I mean by that is, in order for interest rates to get back in the threes, the government has to buy more bonds on the secondary market, which he's trying to rearrange how Fannie Mae and Freddie Mac work the bond market, right? Or secondary mortgages. So I think we'll see some corrections. I think at some point rates will go down because if the market gets better, but just prepare. Like, that's the only thing we can do. Like, nobody's coming to save us, and we just got to prepare. We got to, biggest thing, I will tell you this. If you hear Jerome Powell, the Federal Reserve Chairman, say that interest rates have dropped, that's an opportunity to refinance your car because those rates drop. So if you can refinance your car and get a lower payment on that, you may not get a lower mortgage payment, but that helps increase what you qualify for, or it helps decrease what you're putting out of pocket on a monthly basis. So we just got to be smart about it. But the things that he wants to do in terms of lowering housing prices, but deporting the cheap labor, doesn't make sense. Because if I have a lot, the president of the United States can't tell me how much I can sell it for. So I just think we need to prepare. Like Micole said, you can use a second income. You just have to work it simultaneously with your first position. And if it takes 2 years, it just takes 2 years. But you're probably going to need every bit of that in this market.
Yeah. Well, thank you so much, the favorite lenders, for my channel. I appreciate you guys so much for coming on and giving really good sound advice over the last, I know Micole at least the last 5 years, Kevin probably the last 3 years. I really appreciate you. I will put their replays in the description of this video as well. Please hit the like button. I really appreciate it. It helps this reach more people. And you all have a great night.
See you, everyone. Subscribe. To her, me.
Bye.
Email Micole and tell her to start one.
I'll get with you guys on that. Seriously.